All right, ladies and gentlemen, we have to start with the presentations. I request everyone to please take their seats, and we would be calling up some amazing and dynamic people on the stage to speak on rising trend in fund administration and outsourcing opportunities. Everyone, a big round of applause for Mr. Hemal Mehta, CFO, advisors over here, alternative asset advisors. Everyone, a big one. And then, may I please call on stage Kaushal Kapadia, Principal and Head, Fund Administration, Multiple Alternate Asset Management. Everyone, a big one for everyone out there. Then we have M.S. Chandrasekhar, Co-Founder and Executive Chairman, Hexagram. Then, may I please call on stage Riyaz Ladiwala, President and Head Technology and Operations from Nuvama Group. Everyone, a big round of applause for all these amazing leaders. All right, so how are we doing, gentlemen, all there? All set, good to go?
Hello.
Yes. All right, are we set, good to go? So
yes.
I can see a lot of audience is waiting for you, your presentation or your discussions to be started. Any, handovers or you want to give them before we go ahead? Anything, sir, from your side? Anyone?
Go ahead, Kaushal.
All right, great. Everyone on the stage, and we will be getting back soon. Thank you so much, sir. Over to you. Thank you.
Thank you. So at the beginning, we'll start by taking a look at the fund administration industry today, looking at the growth of the alternate industry. There are various sources which are projecting a growth at as high as 25% CAGR in the coming 2 to 3 years. Do you see this growth as sustainable beyond that? That's the first part of my question. So Kaushal, can you, dwell on this a little bit before we move on?
Yeah. So as you rightly said, a 25% CAGR, I think the industry has seen this growth over the last 5 years itself. If you see the published numbers of the AUMs of AIFs registered with SEBI, I think in 2018 it was around some 1,80,000 crores, which has just last year it has grown up to almost close to 7 lakh crores. So it's grown at a CAGR of more than 25% over the last 5 years. And as we are seeing that the Indian economy is growing, the macros are growing, we are preparing for a 5 trillion economy over the next decade. These numbers definitely are going to grow, and my sense is that at least for the next 5 years, I don't see this growth rate tapering off.
Oh, that's fantastic. So, but do you perceive any challenges to this, Hemal? Yeah, one, we have a huge goal in terms of reaching a certain size in terms of economy. There are factors which are promoting this growth right now. Similarly, are there any things which you think could be a challenge for this growth?
Sure, thanks. I think the earlier session which we just attended from Mr. Prashant, I think alluded more about the equity investments. And I think the alternative space which we are currently talking about is more to do with the private credit, private debt, and other sort of investments. I think all the engines are roaring right now for India, as we saw in a couple of slides earlier. On the alternative space, I somehow feel this 25–30% CAGR growth is something which is sustainable, but at the same time, definitely challenges will remain depending on whether the fund managers are able to deploy their money on time, on the right assets, right classes of assets, and definitely people like us who are on the back supporting the fund managers in terms of reporting, in terms of delivering their expectations to the LPs, regular reportings and various other deliverables. That is something which always remains a challenge for India as of now. So definitely I think this session which we are all into, which is the fund admin role, I think the challenge for us is to deliver what our fund managers and our LPs are expecting us to do. And this is a continuous challenge for all of us to look at.
Sure.
Yeah.
Riyaz, taking on from where Hemal left off in terms of a challenge by the service providers, if I may generalize that. Do you also perceive that? Do you see the service providers being challenged to support this growth?
See, over the last 5 years, and we've been speaking about the fiery growth that has happened anyway in terms of the industry overall, I think the industry has managed to keep pace. So there will always be a catch-up which is there at the service provider level. But overall, I think they have managed to keep pace and they will adapt. India as a country is all about adaptation and making the best of opportunities. The fact that we believe that there is going to be an industry and the opportunity is there, which is why all of us have gathered over here to see that what is going to happen over 5 years, and then you just prepare yourself for that. So I think in terms of talent pool, technology, all of this, it will become available. I think the challenge is more like Hemal is saying, that whether the experience of the investors and their expectations of LPs, that will be met in terms of returns, governance, and the ability to deploy. I think these will be more bigger factors rather than the ability to execute and deliver on the back end.
Fantastic, fantastic. So moving on, when we say the expectations of LPs and managers and other investors have to be met, how do you see the present state of the fund admin industry here? Is it limited to fund accounting, or does it embrace a wider role in terms of how it can partner this growth?
So the fund administration industry, the way we see it, or the way we understand fund administration, for some of us, or many of you guys who are there in the audience who have worked with, say, foreign funds or who have worked in the offshore space, where there is a very clear defined role of a fund administrator. So a like-to-like example in India doesn't exist. It is still evolving. So you do have, say, for example, the different pieces when you're looking at running a fund. So obviously outside of fund management, which is the core deliverable of the investment manager, when you look at the back office functions, so there is a well-developed industry for custody, clearing, fund accounting, for RTA services. But for all of this to come together and function as one, which is what you see, or the well-integrated ability that is there for the international fund administrators, that is still evolving in India. And that is, I think, a huge opportunity, because the entry barriers for doing an AIF in this country are very low. It doesn't require too much of capital, it requires expertise. So you will have a whole new breed of fund managers who will want to come, very intelligent people who will want to come and manage money and have the ability to manage money. But they don't understand and don't want to get involved in the nitty-gritties and the grind which is there of back office operations. So if you do have a service provider who will be able to offer you a solution saying, you come to my office and I'll help you draft the PPM, I'll help you with lawyers, I'll help you do a compliance. And you know what, I'll stitch your whole fund together, you take care of your core activity of fund management. I think that's a huge opportunity that is there in India. And it's still evolving. It doesn't, I mean, if you had to ask me for a like-to-like, I don't think so. I think K FinTech is getting there. And we work very closely with them. I think all these things are in the right direction. But the structure, the way we understand fund administration is still evolving. It doesn't exist in India, per se.
Yeah, I agree. It is in a nascent stage, if you ask me, because most of us specialize in certain services and we have not strung it together very effectively so far.
I would, if I can just add to what he was saying, I think taking one step back from what Riyaz is saying, that as a fund administration, as a function, first of all, how does it help the investment manager himself? Like Hemal mentioned, that we are acting as the support function, or in fact I would say it's the backbone of the entire investment manager. And there are two key functions that the manager holds. One is that investing in portfolio companies, identifying those investments, that's one piece of it. Second piece is fundraising from investors. I think these are two key elements that a manager is usually interested in carrying out on his own. And this whole function acts as the backbone or the central nervous system, if I may compare it with our human body. I think that's where it plays a very critical role. And therefore, as time has passed, with the increasing complexity of large number of investors coming in, different larger sizes of AUMs coming in, the compliances being increased from day to day, taxation complexities, different jurisdictions coming in, etc. I think the relative importance of this function overall for the manager has definitely grown, and therefore, how much of it can an administrator take up as an outsourced service versus how much can be done in-house? I think that definitely is a subtle balance which the manager has to maintain. But I would say the role of the function itself has grown manifold over the last few years.
Fantastic. See, you have been for more than 10 years, you've been running fund administration by yourself for your funds. Right? And when you're looking at a third-party service provider vis-a-vis how you have grown your capabilities, do you see any comparisons? Do you see any, obvious pluses, or it could even be guidance for the industry? How do you see that?
No, definitely. I think there has been there are pockets of functions which are currently available to be outsourced, and many of the service providers are providing those services. But like you mentioned, is if there is a end-to-end kind of a structure which is available with any service provider, my sense is it is not today. There are various pockets which can be grown, and where some of the routine, or I would say not routine is not the right word, but standardized practices can definitely be outsourced, and some of them can be done very easily, like onboarding, for example. It's I don't think many service providers are still providing that kind of a service, or say valuations, for example, can be a good venture for them. It's pretty much known based on the certain standards and registrations which they need to take, but it can be a complete set of service which can be aligned with the fund accounting which they are already doing. So I would say there are pockets of additions which can be done. Fund setup, like Riyaz mentioned, is globally that is a big service which many of the administrators do provide, whereas in India it is more restricted to the legal firms who are running it today. So the industry is evolving. They will, I think, as we share new ideas, I think they will also be building up capacities, and with the new growth coming in, surely they will be able to take up this new business opportunities.
Thanks. Hemal, since you have experience in multiple geographies, I know you've been in UK, Dubai, and a few other places, and I'm sure you've dealt with fund administration setups there. How do you compare the industry in India with respect to the markets that you're familiar with? Are there any takeaways for us?
Sure. Yeah, I think India has definitely evolved quite a bit. In fact, we are the back office for the world, definitely. So I somehow feel we have the best brains in the industry, whether we are talking about delivering for the UK clients. I know a few people in this room who are actually working for a lot of UK fund houses, a lot of Singapore fund houses. So I think everything is there in this room, definitely. I think different fund administrators, fund managers. I think one thing which always lacks in India is that we still are in the catch-up mode, right? So, it's like fund manager will start thinking about new strategies, new way to actually deploy money, new way to actually tell their LPs saying that, look, this is a new strategy which I would like to actually work on. Unfortunate part is that, by the time they cook up the whole story and they come to the back office and say, look, this is what we've now thought of, and we want you to now look at the back end piece, and, I hope that everything is very well set. I think that is where, we take a lot of time in gathering information, setting up the whole shop. There's this term called as carried interest, and I'm sure a lot of you are aware of. Now, this has been going on for years, right? So everybody knows that in a private equity industry, in a private debt industry, carried interest is something which is, it's quite basic. But I doubt there are fund administrators or service providers who have automated how to compute carry. Because it's so much, tailor-made that, you need to actually apply your mind and actually sit with the fund manager's team to understand the whole structure of how to get into various computations of carry and other models. So I somehow feel that there's lots to do, but yes, we've done quite a bit from our perspective. And this is an ever-evolving industry, but having said that, there are a lot of things which I think Shrikant in his earlier slides did mention that KFIN is working on so many initiatives. I somehow feel that definitely we all are in that journey of catching up on the requirements of the client. I think somewhere we should have a platform which actually preempts certain requirement, and maybe this is the time now, because we all know that India is going to grow at this pace, and we've been talking about growth every now and then. But I think somewhere we have to be a step ahead of the curve in terms of our delivery. So that's something which is at least my expectation.
That's good, but that brings a related point to mind. See, unlike traditional funds, where most of the processes are commoditized, so to outsource becomes so much more easier. To grow an outsource model becomes easier. That's kind of matured and come to like a well-oiled machine, this happens at this time, this happens at this time, this happens. Whereas this is a far more differentiated industry. When we're looking at alternates, almost every fund launch is unique. Although the PPMs are standardized, that's just a template, but the content within that is fairly unique. Do you see that as a challenge for the servicing industry, for the industry which has to scale up? Because we'll be constantly learning, right? Whereas perhaps in developed markets, it's gone to a stage where everybody understands, like you said, carried interest, clawback. I mean, you have, sometimes it feels as though it's deliberately mystified. End of the day, it may be a simple concept. But do you think that will be a spanner in the works for us to scale?
You want to take that question?
Yeah, sorry.
So like I said, the industry will evolve. This is a journey. And if you look at it, I mean, when I started my journey in the AIF industry about 6 years ago, the kind of services that were available at that particular point of time, the hair that I have lost, as many people in this crowd would have. And today it's a lot more smoother. You're able to sleep better at night because technology has moved, the understanding has moved, talent is now available. And there is now scale in the industry, right? There is scale in the industry which is enough for aspiring service providers or existing service providers to also invest ahead of time. And if we all believe that over the next 5 years, when you're talking about an industry that is expected to grow at 25–30% CAGR over the next 5 years, then you're genuinely talking about scorching pace which is there. This industry will double or more than double over the next 4 or 5 years. Then the opportunity is there. So these things will evolve. The intent has to be there. It is people like us. I think, but one factor which has not been discussed, and when we've spoken about challenges, it's also, I think the regulatory oversight which is there on this industry is also evolving.
Right.
And that I think is going to play a very important factor. See, big part of this growth has come over the last 5 years because all the check boxes were ticked, right? The client need was there. So there was a demand for these kind of products. There was a distributor need also from a commercial point of view which was available. And then the ecosystem, the regulator also wanted to make sure that this industry grew. So that's the reason it has grown. Now we can see there is a direction and a stance that the regulator is taking. So a lot of the leeways that were typically available to investment managers, and I'm talking about really basic stuff, saying like when can you do or when should you do your first close, when is your final close meant to happen. All of these things which were, we all have written PPMs where it was said that this is at the discretion of the fund manager. Now it's not the discretion of the investment manager anymore. It is now regulated. So these things will come into play. And all of us are anyway seeing, I mean, there is discussion to raise the minimum ticket size in the AIF industry from 1 to 5, and hopefully we're hoping it will settle at 2. And you know, what happens from a commercial point of view for the distributors who are distributing these products. These things will have a role to play, but very clearly the direction is there, it is upwards, and the opportunity is there. The reason for that is the need is not gone away. The investor need is not gone. The investor need is still there for products like this.
That's a good insight. Now, speaking purely about the opportunity, I know Hemal mentioned that many people in the audience work for UK funds, providing back office support out of here. Do you see this industry growing like the IT services industry did? IT services industry also had a similar path where it could service developed economies and could scale up the servicing model, and it could reach heights, which as Prashant's and many other discussions, this fact was mentioned multiple times today. Do you see this industry also, you know, do you see a parallel here? Because this is, I think, although software has its mumbo jumbo, this is also pretty knowledge intensive. Yeah. My opinion. It is not just accounting knowledge either. Absolutely. Right? So you need to have an appetite for it to understand. I mean, going through a PPM requires a lot of patience and understanding. So given that constraint, do you see the ability for this industry to scale in terms of offering these services across jurisdictions? Absolutely. I think you know, when you draw parallel with anybody globally, I think India is somewhere right at the top in terms of taking this opportunity on the outsourcing space. We've always done this in the past, so it's not new for us. I think what is new for us is, you know, the expectation of the new age fund managers which are coming in. So we know about the good old mutual fund industry. I think everybody's evolved from the mutual fund industry, and everybody feels that, look, if I've done mutual fund, I think AIF is no-brainer, right? But when people actually work on AIF, they understand that it is so much bespoke, right? Mutual fund, you can churn out SOS, I think as Shrikant mentioned, 15 minutes, this 1 hour, maybe end of the day, NAVs and whatnot. In an AIF industry, you know, you do valuations maybe once a quarter, once in 6 months. You have to do various other computations. I think the expectation from the industry is also that, you know, if we do any debt investments, what is my outstanding collection from my investments? This typically doesn't happen in a mutual fund industry, right? So you have to basically track your investments. That's the kind of expectations you would have from your fund administrator. And globally now, a lot of foreign banks are getting into this space. So I keep getting calls practically, you know, once in a week from these global banks who are actually now going full hog into the admin space, based out of Singapore, based out of Mauritius. So they say that, look, we have one sleeve now, so you use us as your primary banker, we are your custodians, we will also give you the whole fund admin thing. We've got this bouquet of services. The moment you do an investment, we can track how your investments are doing, you know, what's your outstanding on a given day. You can have dashboards, you can have everything at a click. So I think
everybody wants to be in this space now because the opportunity is just getting larger by the day because the AUMs have swelled. So even for India, for that matter, the sooner the better for all the fund administrators who want to get into this space. But definitely, I think technology is the key. But even to understand that technology, it is very important to invest in the people who are actually working on it. So I think you need to have dedicated teams who can actually sit with the fund managers and their team to understand their requirements, specific requirements, and it's not a day job. You know, it's not a plug and play the way we start thinking about mutual fund, right? Like you can onboard a mutual fund tomorrow and you can start the day later. For an AIF to onboard, it will take a lot of time because you will have to go through the nitty-gritties because every contribution agreement, every LPA which you have signed with an investor will be different. There could be side letters, there could be signed arrangements, right? But a fund manager or the CFO would want to know that, look, I hope you've mapped everything together and I want the final outcome, right? So I'm saying this is very bespoke and you know, one has to be up the sleeve in terms of getting into this space because it should not happen that you eventually figure out that, you know, maybe this is way different than what I would have otherwise thought of because I already come from a different industry, which is the existing mutual fund industry. So, lots to do on this.
So by and large, we agree that there is a lot of scope in terms of delivering this service, not only to the Indian alternate industry, but the service can be expanded to provide at least cherry-pick services, if not the entire bouquet. That's point number one. But coming to this point that a lot of multinational banks and larger entities are, perhaps they already are, and they are also in India coming into providing fund administration, how competitive do you think the industry will become? You know, because local players will always have an advantage, but they may not have the same brand chuspa that a multinational bank can bring in. They can deliver services, they can deliver quality, but do you see that playing a role in being competitive? How much of it, you know?
So I would say in terms of competitiveness, there are the real services and the understanding that the service provider will bring in onto the table, that will act as a differentiator. We have seen many of the global players who probably may not know much about India, or maybe their technologies are not mapped or designed for the Indian AIF perspective. There is a gap, and because they are defined in a particular way, for them to modify and customize something for Indian AIF becomes a huge challenge for many of them, and therefore fund managers who wish to are able to fit into them can only be service provided by them. Whereas on the other side, the flip side of having an Indian service providers could be they may not be fully aware of all the global reporting requirements which international LPs may need. So I think the competitive edge will come out really from the bouquet of services and the understanding that the organization can bring to the fund manager. That would be one distinguishing factor, and second would be the technology which they are using, because we've seen the expectation from the investor side has also been increasing in terms of how they are able to see the data, how fast, like you mentioned, how fast we deliver the data, speed, real-time data availability, and as more and more family offices are getting into it, HNIs are getting into it, the need for delivering that correctness and accuracy with speed is definitely increasing. And people are expecting to be available on the cloud, on the go, mobile apps, etc. So whatever best the technology can be used, I think that again will be a distinguishing feature for competition.
Great. Riyaz, any thoughts on technology? What could really help boost scaling
So I'll give you
purely
my,
from scaling up.
so I'll give you my view on technology, but I'll just like to add to this question because I think it's an extremely important question which is there. I think the entry of the international fund administrators to India will make it, I think, interesting, and it will lend a lot of choice. But I don't think so they have a natural competitive advantage. I think when it comes to technology, the way the Indian mindset is and adapting technology, it's, I mean, I've seen it in my 25 years. You can't just take an application just because it works in the US and in Europe and you bring it to India and you think it will work. It doesn't work that way. It needs to be customized for India, and for that you need to have people who understand Indians and who can speak the language of Indians, and that is where I think the domestic houses will have a huge competitive advantage. The second point which is there is, I think beyond the point the brand will not really matter, it's the quality of services. We know technology, we know people. The challenge, I think, what the industry will face, I think the domestic is, I think there will be a repricing of talent which is there because it is a knowledge industry, and today, unfortunately, the industry works on a very, very low margin, I think, but there will be this is not like setting up a call center and somebody saying hello and there is a screen. It's not like that. It's very, very knowledge driven. It's a very intelligent industry, and the technology also which is required to service will be very intelligent. Can it be done 100%? Is somebody thinking, and I hope they are, in terms of looking at it as a platform? I don't think so. People are looking at it as a platform where you can offer end-to-end services. Everyone's still thinking in a very siloed manner, saying I want to become the best fund accountant which is there or the best custodian, but not looking at it as a fund administrator. And I think there is a need to, there's no word like that, but I'm just using it, to e-commerceize this. I'm saying if you're looking at somebody like in India who knows how to make a product and today he's able to load it onto Amazon and sell it and get money and do the delivery. For somebody who has never, dealt with e-commerce in his life, but he learns how to do it, but he knows his product very well. So you'll get that breed of people who will come in who understand fund management very well, who understand products very well, and therefore the need of somebody who can play that role of Amazon in the fund administrative space, but they look at it as a platform. So there's a mindset thing which is there. And coming then, linking to the question that you asked me, I think technology will play a huge role which is there, because when you're creating platforms which can work 24/7, working across the clock, across geographies which are there, technology is a great leveler. And it will help to drive innovation. It will actually, I think today the innovation is being driven by the fund managers rather, and they are forcing the RTAs and the other fund accountants to become more clever and more innovative in their approach. I think technology, once the platform approach comes into place, then the fund administrators will drive innovation. They will give ideas to fund managers of this is what you can do and manage your funds better, faster, cheaper, whatever else matters to them. So there will be that point, I think. I don't know when that tipping point will happen, but technology will play a huge, huge role which is there, because the kind of complexity we are talking about is not possible given it's a really bespoke industry in a way. It's not possible to run it on an Excel. I mean, if Excel is your back office, so anyway, there's a big problem. The technology will have to drive that.
No, that's a very good thought that you shared, that administrators will be able to deliver innovation or support innovation in the industry.
If you go to a fund administrator in Singapore, he's the one who will guide you and tell you this is what should come into your PPM, this is what you should do, this is how the regulator looks at it. They drive the thought, because the guy who's coming to him to set up the fund, he knows how to manage money. He doesn't know necessarily how accounting works. He doesn't know necessarily how compliance, what is it that is required, how taxation works. But that is where the fund administrator has to come in. How the fund structure can be made to suit his various LPs, that is the expertise that the fund administrator works. Today, that onus of all of that is on the investment manager. But the moment somebody is looking at it as a platform, bringing all of these things together, it will change.
Great, great. But that we need to introspect on the talent available here, because we spoke that this is a complex industry.
Pricing, I said repricing. Once the repricing happens, the talent will come.
No, but you need legal talent, you need accounting talent, you need technology talent. It's not like, some other service, where you just need accountants or you just need a good piece of software which is process driven. So you could put an assembly line and deliver services. But here, it's a combination of multiple things, right? Unless the industry matures, scaling will always be a challenge, right? Every time you come up with a new concept and, I'm sorry for using this word, bury it in more, jargon that people will not be able to, uncover very easily, it's going to be a challenge to scale. That's my view anyway. But moving on to talent, do you see availability of talent as a constraint for the industry? Hemal, let's start with you.
I think India has never crunched on talent, to be honest, because even if there is a crunch, I think next day morning people understand that this is the opportunity and we just get into it. So I think we are the most competitive people on this globe. So I don't think there is crunch of talent. It's more about incentivizing people. Right. And it's more about giving them the right path and their journey and their maybe, as we call it, that we'll chart out their end-to-end life cycle, saying that, look, you start from here and this is where you will end, right? So I somehow feel India has great talent pool. I think there is one session during the day on Gift City, and I think one of our panelists is going to talk about it. I'll just give a small example of that everybody started thinking that why should I go to Gift and, God knows from where will I get talent, right? And all of a sudden you come to know that KFin has thought of putting 300 people in Gift, and maybe somebody else has thought of putting 400 people, and there are people who want to migrate. Why? Is the reason is you want to build a career into a particular space and you get better work-life balance and you want to make a career out of it eventually. So I don't think talent is an issue. It's all about how you give them the perspective about the business and you incentivize them. So definitely people can adapt very fast on that matter. But let me ask you one question, because you are from the technology background. Sorry, I'm just switching roles.
Sure.
Because you've developed a couple of platforms for KFin in the past. Do you see a lot of potential to do further in terms of certain missing pieces on the fund admin side? Because you've more or less done on the accounting piece, you've done something on the onboarding piece. So what's the missing piece according to you?
No, I think the missing piece for most of the service providers will be this ability to help you set up funds, provide legal advice and things like that. Because if you look at KFin or Hexagram, where I come from, we are more tech-oriented than knowledge in specific areas. Those are the areas we need to scale. It requires human capital more than technology. That's my feeling. Technology can templatize activities and make sure a person can service, say, 100 alternate managers instead of 10. Okay, that role technology will play. But human capital, as you rightly put it, incentivizing human capital, getting the right talent, and nurturing them to make sure they become efficient providers of service. That's where I find some amount of gap. I don't think it's insurmountable gap. But that's the place where I think we all need to focus on as service providers. If we want to become end-to-end players, we can very well be happy saying, I can scale accounting, I can scale investor management, I can scale CRM. That could also be a good path. There's nothing wrong in choosing that path, because that leads to scale far easier than trying to scale providing end-to-end for very original, creative vehicles like alternate funds. I personally find the challenge to be one of its complexity, its ability to create things with every offering. its ability to have side letters which would make sure a particular T&C in your PPM is interpreted differently for each investor. Right? So all these would become slight challenges. This is where I see. But do we have a little more time? 5 minutes? 5 minutes, please. Because there's one important point that, speaking of talent, you see there are, how do I put it? There are colleges or courses that can churn out more talent. Do you see that already there, or can we take it up with the industry body to make sure we have some structured courses which will make sure people can become proficient in?
Definitely. My personal view is that while there is a lot of talent available in terms of whether it's accounting professionals or technology professionals who are there, but given that this is a very niche industry and the level of understanding and the nuances which need to be taken properly, and it's a knowledge-based service to be given, I think there is definitely a dearth of training programs, I would say, which is currently there. And if I just look from the shoes of a fresh chartered accountant who is looking to go forward into this industry, there is no, so to that extent, a certification course or a ready reckoner available that, okay, I'll go here like an NCFM course and I'll get myself upgraded or upskilled for the next journey of my career. I think there definitely is a need. There are pockets of courses which keep happening, but there's no systematic thing which is available as of now.
Thanks. I think we have run out of time. But in summary, I think it was great chatting with all of you. Obviously, there's a great future for the fund administration industry, given the growth and the type of, the complexity is a challenge. Let me put it that way. I may have sounded negative about the complexity of the industry, but that's also a very interesting challenge which will make people go after it, to master it, and to make sure we scale. Okay, we discussed technology, we discussed talent. I think talent is in abundance. I agree with Hemal, as you mentioned, that the ability for us to understand something, provided that initiative and the drive and the catalyst is there, is phenomenal. I think the growth of the industry will become that catalyst. And we also discussed that multinationals coming in may also provide a upward shift to the cost arbitrage. It may improve and make sure life becomes slightly more interesting. And as Prashant put it, perhaps more cars on the road. Of course, hopefully not in Mumbai and other cities. So with that note, thanks again. Thanks a lot. Thank you.
Thank you so much, gentlemen. All right, that was an amazing session, I must say, by these wonderful people over here. For felicitation, may I please call on stage Mr. Senthil again from K FinTech. Everyone, a big one. A picture, please, if you don't mind. Thank you so much, gentlemen. It was lovely to have you on the stage. Thank you.